Good morning. You're watching All You Need to Know on BloombergQuint. I'm Darshan Mehta. This is India's first digital live streaming business news service. First, let's take a look at the headline. The European Union has agreed to grant the UK a 3-month delay to enforce Brexit. January 31st is the new deadline. ICICI Bank's net profit missed analyst estimates owing to a one-time tax expense. Asset quality and margins improved on a sequential basis. Tata Motors' net loss narrows in the second quarter. JLR springs a positive surprise. Promoter Tata Sons will infuse 6,500 crore rupees in the car maker. The boards of Reliance Industries and Reliance Jio approve creating a new digital platform holding company. Also announces debt restructuring that will make Jio debt-free by March 31st, 2020. And Manohar Lal Khattar was sworn in as the Chief Minister of Haryana for the second time. JPP's Dushyant Chautala was sworn in as the Deputy CM. It was a positive day of trade for Wall Street. The S&P 500 saw a record intraday high of over rising optimism of a trade deal. Another key trigger for the markets this week will be the Fed meeting. Renita Young of Bloomberg News wraps up Monday's trading session in the U.S. in this report.
U.S. markets ended higher on Monday, and the S&P 500 saw a new intraday high, all on U.S. China trade optimism. It's another week of corporate earnings results, and the U.S. Federal Reserve will meet this week and give its latest policy decision. During the session, we saw Microsoft jump after securing a contract with the Pentagon. Tiffany surged after Louis Vuitton owner LVMH said it held discussions with possibly purchasing the jeweler, and PG&E plunged on more liability risk as wildfires rage in wine country in California. Meanwhile, HSBC slipped on disappointing earnings. More earnings continue this week with companies including Facebook. Meanwhile, 10-year Treasury yields hit a 6-week high. The Bloomberg Dollar Spot Index was a little bit lower, and so was gold. And auto catalyst metal palladium, however, surged above $1,800 an ounce for the first time as clean air rules boosted demand. And that's a look at your Wall Street action on Monday. In New York, I'm Renita Young for Bloomberg News.
U.S. President Donald Trump says that the U.S. is ahead of schedule on signing a Phase 1 trade deal with China. He reiterated that the deal may be signed in Chile this November. This comes after China said that parts of the text of the deal with the U.S. have been completed. Tom McKenzie of Bloomberg News brings us more details.
Well, it sounds like there's been a lot of progress on some of the minutiae in terms of the regulations and the framing of language around agricultural purchases, and that was a bit of a sticking point. But it sounds like the deputies have got that language pinned down, at least if you take for granted the comments that we got from China over the weekend when they discussed the progress, as you say, almost entirely complete the text for this Phase 1 part of the deal. So it does sound like they've made a lot of progress in order to get this across the line come November the 16th and 17th in Chile at that APEC summit. And again, both sides singing from the same hymn sheet in terms of their optimism so far on the progress that's been made. Again, Trump saying that they were ahead of schedule in terms of these talks. Again, we know that the US side has said that China's committed to intellectual property commitments and, of course, commitments around the currency in exchange for holding back, the US holding back on additional tariffs, of course. Now, there may be some sticking points around those issues as we get closer to that November the 16th, 17th quote-unquote deadline. But so far, again, the two sides seem to be aligned on this front. Of course, the big questions after, if we do indeed get this Phase 1 deal signed off in Chile, is what happens to Phase 2 and Phase 3. And there are major question marks, of course, as to whether or not they can really make any progress on the big sticking points, because the Phase 1 is really the easy stuff, the agricultural purchases and these commitments from China around intellectual property. Phase 2 and Phase 3, that is industrial policy, that is state subsidies, and those are the sticking points, of course, that have held up these talks for so long and proved so controversial.
Yeah, there's deeper structural issues, right? Tom, even as we get some optimism on the trade talk front, we've seen this push to limit U.S. pension fund exposure to Chinese companies really amplify as well. Is that kind of a thorn in the side in these discussions?
Well, both sides have been trying to keep these on separate tracks, but you would expect that it seems to bleed into the mood at least, and maybe overshadows the discussions to some extent. It's certainly a reminder that whoever is in the Oval Office, the mood in Washington has changed to such a degree that these issues of national security, of human rights, of technology concerns, all of these issues remain a priority, and for both the Republicans and the Democrats, and that these are unlikely, these issues, to go away, even if you do get a partial trade agreement come November the 16th. So what we're hearing is that Marco Rubio is proposing legislation to effectively ban and stop U.S. government pensions from getting exposure to Chinese equities. This was after one of the federal government funds, which is worth about $50 billion, put on hold temporarily its decision to increase its exposure to Chinese equities. They haven't cancelled that decision, and that's what has led the Florida Senator Marco Rubio to propose legislation to do just that. He says it's a security risk, and he says that you would essentially see U.S. government workers and their pensions funding what he says is the Communist Party of China. Now, the federal funds chair and board says this is about diversifying their portfolio and diversifying their risk. But we'll see whether Rubio gets the support to push ahead with this legislation. We do know that the White House, that the Trump administration has been looking at reducing the exposure of U.S. funds to Chinese equities, that those conversations continue. And of course, we have had in the last few months these additional sanctions from the U.S. in terms of these 8 Chinese companies over human rights abuses. Of course, we had the speech by Mike Pence last week, the vice president, again targeting China over what's happening in Hong Kong, and again human rights issues as well. So all of these things remain on the table for U.S. lawmakers, even if there's progress on the trade front, of course.
Let's take a look at the Asian markets. Rosalind Chin is joining us from the Hong Kong studios. Good morning, Rosalind. A lot of positive cues coming in from the U.S. markets in terms of the China-U.S. deal. How is Asia reacting, and what's the outlook going to be?
You're right, and everything that Tom was saying just now about the trade deal, really, yes, feeding into the markets here. So we have the Asia Pacific Index, MSCI Asia Pacific Index, making gains of about 4%. But actually, if you look a little bit closer at some of the markets, you see right now that although China opened, not much change. It is dipping into negative territory, not really playing ball with the rest of the region. Let's take a look at the different markets. So we've got the Nikkei 225 making gains of about just under 0.5%, while the Topix is up more than 0.8% right now, really. Heading for an 11th month high there, doing particularly well there, and that's partly on the back of those trade sentiment and also the prospects for a Fed rate cut that might be coming later in the week. The BOJ, of course, also is going to be meeting this week as well. The Kospi is just about flat. Hang Seng Index is making gains of under 0.1%. Now we do have the WH Group, which is a big pork producer that is listed here in Hong Kong. That surged more than 8% when the markets opened today. That's after third quarter earnings. Citi lifted a target price by 64% for that particular stock, though that has been getting a big boost right now, trading up higher by 5.6% here in Hong Kong. Of course, we've known that pork prices have been getting a boost because of African swine fever that has been affecting hog stocks in China, especially, which is, of course, one of the world's biggest consumer of that particular pork. The growth driver for WH Group is, in fact, it's of the fresh meat is, in fact, its Chinese market there. So on to China, the Shanghai Composite losing 1/3 of 1%, the CSI 300 down by just under 1/5 of 1% right now, which will see whether those markets decide to stay in negative territory today. While the Straits Times pretty much leading gains at the moment, up by more than 1% right now. Straits Times Index pretty strong to its highest in nearly 3 months there. And Australia's S&P ASX 200 pretty much flat. Energy stocks among the decliners there. Of course, we saw the crude oil prices were dropping on concerns over potential supply glut returning there. And of course, a look ahead because Australia does have its bank earnings season coming up as well, and that is likely to put a little bit of pressure on the banks, and that, of course, could mean the prospect of more dividend cuts. Back to you.
Okay, Rosalind, we leave it at that. Thank you so much for joining us on today's edition. Now, also, let's take a look at what's making headline across the globe. Sue Keenan of Bloomberg News brings us the first word headlines.
We start with the ECB and the changing of the guard. ECB President Mario Draghi has handed over the baton to Christine Lagarde in the form of this golden bell. Lagarde will take the helm of the ECB this Friday. There it is. The bell is traditionally used to call the central bank's policymakers to order. Speaking at the handover in Frankfurt, Draghi signed off with a call for more fiscal action to stabilize the region's economy.
Today, we are in a situation where low interest rates are not delivering the same degree of stimulus as in the past, because the rate of return on investment in the economy has fallen. Monetary policy can still achieve its objective, but it can do so faster and with fewer side effects, negative side effects, if fiscal policies are aligned with it.
Boeing CEO Dennis Muilenburg is set to admit that the plane maker made design mistakes on the grounded 737 MAX. He will testify in front of the U.S. Senate's Commerce Committee on Tuesday. According to the advance copy of his statement, he insists that the lessons learned will contribute to safer aircraft in the future. Muilenburg's testimony coincides with the one-year anniversary of the Lion Air crash, which killed 189 people. Many say he will be in the hot seat. To Israel now, where the Prime Minister Benjamin Netanyahu says his country is being targeted by Iran. He said Iran has placed missiles in Yemen that cannot or that can hit any target in the Middle East within a radius of 5 to 10 meters, with the goal of hitting Israel. Now, speaking before a meeting with the U.S. Treasury Secretary Steven Mnuchin in Jerusalem, Netanyahu also claimed that Tehran wanted to set up more missile operations in Iraq and in Syria. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
Okay, let's take a look at what the trade setup is lined up for today. We are seeing a net positive SGX Nifty. It's up at almost 11,679. Remember, the SGX was open yesterday. We were open on Sunday. So overall, it seems like we will have a positive start, because if you're looking at the Nifty, what happened on Sunday, the Nifty ended with a positive bias. So another 40-point upside is something that we can expect on the Nifty. The mid-cap and the small-cap end of the market did manage to outperform the Nifty itself on Sunday. Now take a look at the banking space, the PSU banking space and the Nifty Bank, all of them reacting. But today, the institutional activity will come in on SBI and ICICI. So that's something that you need to watch out for. Vedanta was up almost 0.8% on the ADR side. ICICI has reacted positively, and Tata Motors continues its good run. It was up another 1% in trade. The other stocks that we need to watch out were the counters, which were down in trade. Infosys continues to bleed. Dr. Reddy's ahead of the numbers over the next few days was down in trade. Now, FI buying was hardly anything because it was a truncated Muhurta trading session, just 1 hour of trade. But DIs were active, 54 crores of net buying, and majority of that probably would have to come in Tata Motors. The Nifty was up 50 points. What contributed? Infosys, HDFC Bank, and Tata Motors did manage to contribute. On the negative side, it was TCS, Bharti, Airtel, and Titan over the past few days has been looking rather weak. So that's the trend that we're seeing at this point. As far as the F&O market is concerned, obviously volumes were extremely thin. You're seeing that rollovers were almost 15% on the Nifty. Remember, it's expiry week this time. Let's take a look at the Nifty Bank and see what the rollovers were there. 25% open interest build up, 25% rollover, a little bit of short covering that was seen. The other factors you need to watch out is where positions are being taken. We are close to the 11,700 mark in trade, but call writers are still active from levels of 11,500 to high level, and put writers from 11,600 to lower levels. So positions are being taken on either side of the current market price. In trade on Sunday, since the market was looking rather strong and the Nifty was up, put writers were active, and at lower levels, call writers were forced to shed positions in open interest. The VIX was up almost 2%. The open and the PCR actually managed to stay stable across all series. So that's the Nifty PCR 1.22. Some of the counters in focus: fresh buying seen in Tata Motors up 16%. LXC has been doing rather well for itself. Yes Bank over the past 2 days has gained almost 15%. Marico ahead post the numbers, so a little bit of fresh short positions, and Apollo Hospitals managed to move on decent open interest build up. On the counters which lost in trade or saw open interest decline, Indigo continues to fall in trade. Volta saw a bit of short covering that came in, and again Infosys and Max Financial saw short covering that was there. So this is basically the trade setup that we are going into today. But in terms of other news, corporate tax cuts will be instrumental in reviving the sentiment in the market. That's the word coming in from market veteran K.R. Choksi. He spoke to Yatin Mota on the sidelines of the Muhurat trading day and also explained his optimism on the sugar industry. Let's listen in.
Basically, market should revive this year because government up till now was not worried about the economy. Now every day some instruction is coming or instruction is coming from the government side that economy has slowed down and we should take some steps to gear up the economy, and that the corporate tax cut that they have done, I think that is helping the companies very much, because you must have seen the results that the net profit of the companies have gone up because of the cut in the corporate tax.
And Kishan bhai, talking specifically about earnings this quarter, as you said, corporate tax cuts has aided the bottom line. You also keep on attending a lot of these AGMs and meeting a lot of managements. If you could tell us what is the feedback from the industry at this point in time, what are companies believing? Do you think the overall sentiment is higher for companies to undertake capex and expansion?
Yesterday only I had a talk with Alicon Castalloy, that is in aluminum die casting. He was saying that this quarter will be somewhat better, but last quarter will be definitely going to be better.
But do you think the second half of this financial year could be good in terms of earnings?
The second half of this year will be better. That is, second half will be better than the first half because economy has slowly started reviving.
Okay. And sir, I saw you recommending a lot of stocks to the BSE broker members. If you could tell us as a house, K.R. Choksi, what are the stocks that you are recommending to your clients at this time?
Basically, I am optimistic on the sugar industry.
Okay.
And there are three companies which are doing quite well. One is Barike Sugar, another is Balrampur Chini, and third is Dhampur Sugar. This year, there is a sugar production is going to be less because of the drought in the Maharashtra.
Okay.
And the companies which I have mentioned, they are in the UP and they are all doing well because the realization has improved, and plus they all have gone for ethanol production.
Okay.
So ethanol production is quite very profitable. So that is changing the scenario of this industry. Ultimately, I feel that this industry, which is cyclical, will gradually become non-cyclical.
Okay, but sir, talking about sugar in particular, there is a lot of government, intervention also most of the time. So, do you think that could be a risk in the short to medium term, or do you think now a sugar company will become government intervention sector, or probably from here on the cyclicality will move away?
Government wants that the sugar company should give money to the farmers.
Okay.
And that's why they have this year fixed a little higher price so that the sugar companies can make profit. And the future of the company is changing, particularly because of the ethanol production. Because ethanol is a very profitable, and government is encouraging the production. It is used as a fuel in the automobile industry.
Okay.
And it is very profitable. So the companies which have already gone into production, like Dhampur Sugar and Balrampur Chini, they have made good profit from that division.
India's largest lender, State Bank of India, does not expect any more power sector accounts slipping into the NPS. That's according to Chairman Rajneesh Kumar. Hear out what he told BloombergQuint's Shefali Malik post the bank's earnings.
This is our normal run rate, I would say, for quarterly, and sometimes 1 or 2 quarters we surprise with some higher numbers. But for the year as a whole, our fresh slippages would be in the range of 2% of our loan. So that we will maintain. Quarter to quarter variations keep on happening.
Okay, so I could not manage to catch the write-off figures in the quarter, and also the second part that I wanted to ask is that Finance Minister gave a special dispensation of not declaring any MSME accounts as NPAs. So did you restructure a lot during the quarter?
Not a lot during the quarter, but whatever accounts are eligible. And that is a dispensation which was given by Reserve Bank of India. There was a scheme Reserve Bank of India had come out with a scheme where they had given a special dispensation. So that has been continuing since then, and that scheme is valid up to March 2020. And as I said, that whatever accounts are eligible, we are doing it, but the number in terms of the number of accounts is fairly significant, but in terms of amounts, it is not as significant.
Okay, so one of the biggest concerns at this point in time is the credit growth not picking up. And so what is the main reason for that? Is it the demand side concern or is it the supply side concern? You've tried to say that, it's a misconception that banks are not lending, but where is the bigger problem? Where does the problem lie? And also the second part to that is, where would the credit growth pickup come from? Because when I see your credit growth details, the large pickup has been in the retail segment. Yes. The other segments have seen very less growth this time around.
So it is the utilization of working capital limits by the large corporates, which is at around 30% or 32%. So that is the only thing, and we have moved into busy season, and in the second half, the utilization is always better. And retail growth, as you have mentioned, that we are growing at around 18%. So that growth story will continue because we are very competitive in that market. Our processes are quite efficient, and we have the advantage of huge distribution reach. And corporates, as and when their utilization of working capital limit improves, automatically the credit growth numbers will look up.
So the asset quality concerns continue to persist, and one of the newest concerns is now the telecom sector exposure because of the Supreme Court ruling. So how prepared are you for that? Do you have adequate, have you made adequate provisioning for the same, or do we expect that to come in the next 2 quarters or so?
No, there's no immediate threat because they all are very respected companies, let me put it this way. But there are some financial difficulties on account of whatever decision has come, but the time frame in which these dues are to be paid, that is yet to be decided, and what would be the government's response and reaction, that is also to be seen. And as far as your question is concerned, we are always ready, or we have always readied ourselves, and that is what you have seen our effort has been, that create the necessary resilience and strength in the balance sheet and your P&L, that if anything unusual happens, you should be able to bear it.
So I want to ask one question about your exposure to the power sector. How much does it stand at, at the end of the second quarter? And also, slowdown has hit that sector as well, and there have always been regulatory and implementation issues in that sector. So do you see, NPA spiking up in that sector as well?
No, whatever NPAs were there, we already have, I think, about 19 accounts. And in our presentation to analysts, we have given what is the status of each of the accounts. So we have provided 54% on that NPA book, and there is no immediate threat of any other account slipping as of now.
Reliance Industries has decided to create a new holding company for Jio's digital platforms. The move will make Reliance Jio a virtually net debt-free company by the end of the financial year. Sajid Manga joins us on the phone line with all the details of this plan. Sajid, what do you have for us?
That's right. The board of Reliance and Reliance Jio have decided to create a holding company structure for all its digital properties. As per the structure, all the digital properties of Jio will be transferred to this new digital company, which would be, having all the debt. Currently, the debt which is there on the books of Jio will be transferred to this new holding company, and Reliance would be subscribing to this will be taking on this debt on this standalone balance sheet. The structure is devised in such a way that Reliance will be subscribing to the rights issue of this company, and as a result of which, the Reliance Jio, which now has all the digital and the telecom licenses, will become debt-free. As per the structure, Jio will henceforth be only a telecom company, and all the digital properties of it, which includes distribution platforms, the FTTH, which is fiber to the home, and the cable distribution companies, which is Den and Hathway, all will be housed in the new digital company which will be there. In addition, it's all digital properties like Jio TV or Jio Movies, or for that matter, Jio News, Savan. These are some of the and future foray into various other segments like education and agriculture and other or hospital or healthcare services. All will be done through this new company, which would be which will allow Jio to monetize the entire assets. The purpose is to create a company which will be similar to some global companies like an Alphabet in global market, and get a valuation so that it can get some good valuation from the investors. The entire thing is being seen as a precursor before a strategic investor or financial investor comes into this holding company, and this would allow Reliance to further deleverage its balance sheet going forward. Darshan.
Okay, Sajid, thanks so much for that. We'll certainly watch out for Reliance in trade today. Remember, on Sunday, it did manage to trade flat in trade, but all the institutional activity will happen today. ICICI Bank reported a lower than expected profit in the second quarter due to a one-time tax impact. The operational numbers weren't disappointing, though. Shefali Malik is standing by to take us all the details. Shefali, tell us how the numbers were.
Well, the numbers were good if we just take off that one-off DT adjustment. Other than that, the profit itself was above expectations at an adjusted level. It came in at about 3,575 crore rupees. That is the adjusted PAT I'm talking about. So that was a growth of a whopping 293% on a YY basis. Reported PAT, however, was much below. It was down 28% to about 655 crore rupees versus 908 in the same quarter last year. Net interest income looked absolutely in line with the expectations, growing by about 25%. Other than that, other income jumped by about 33%. So that trend of treasury gains boosting the other income we've seen for a couple of banks this time around. So other income went up 33% to about 4194 crores, and asset quality too improved in this particular quarter, with gross NPAs coming in at about 6.37% versus 6.49% on a sequential basis. Net NPAs too improving to about 1.6% versus 1.77 on a sequential basis. Net NPAs, in fact, are the lowest in the last 15 quarters for the bank. So the cleanup exercise that the bank had started undertaking a couple of quarters back is looking very good right now. And their PCR, that is a provisioning coverage ratio, including technical write-offs, now stands at about 85% versus about 69% in the same quarter last year. And the main reason for the improvement in their asset quality was the improvement in the slippages, that is lower slippages this time, and higher recoveries and upgrades. Even the BB and below book, something that they watch out for, was absolutely in line with the expectations. Slight inch up there, but still in line with the expectations.
Okay, Shefali, we'll watch out for how ICICI Bank reacts in trade. Tata Motors was the other one. The net loss narrowed for the September quarter. Better product mix and lower cost aided the performance of the subsidiary Jaguar Land Rover. The company will also get a fund infusion from promoter Tata Sons. Yatin Mota gives you all the details of the quarter gone by. Yatin, give us more details of how the numbers came out.
Well, if you look at Tata Motors' consolidated performance, it was impacted because of lower volumes, but much better than the street expectations. In fact, the operating profits for JLR have led to a lot of brokerage upgrades for trade today. As far as revenues are concerned, we'll talk about the numbers here. 9% decline was seen there. There was a loss reported of close to 220 crores versus a net loss of 1,050 crores last year, same period. EBITDA, however, saw a growth of nearly 15% to come in at 7,046 crores, and the margins also came in much better than the street expectations at 10.8% for the consolidated entity versus a level of 8.5% year on year. If you look at the standalone business, of course, the EBIT margins were negative 9.8%. Clearly here the pressure was due to a 45% decline in the overall sales volume. But clearly we had JLR, which stole the thunder this time around. The JLR sales were up 8% year on year. Margins came in at a record 13.8% versus the expectation of close to 7.5-8%. So clearly a big beat there. As far as JLR wholesale volumes are concerned, including the China JV, that was also up nearly 3% year on year. Also, more importantly, apart from the JLR margin, there was a fund infusion by Tata Sons, which is the promoter entity. The company will issue shares as well as warrants as well as 150 rupees per share. And if you look at the total fundraise, close to 6,500 crores will be infused in the consolidated entity. Of course, the management said this will be used to reduce the debt of the standalone operations. JLR does not need any equity infusion. Let's listen in to the management of Tata Motors as to what they had to say with respect to the development of second quarter earnings.
Okay, we'll move on. Thanks for that, Yatin. But remember, a lot of brokerages have upgraded Tata Motors, so CLSA, Bank of America, Merrill Lynch, Axis Capital. It was up 16%, but we'll watch out for the institutional activity, whether follow-up buying happens or no. Bharti Airtel may report a net loss this quarter. Seasonality and some temporary disruptions in some circles are likely to impact the operational performance. Samit Sarkar is here to take us through all the expectations from Bharti Airtel.
So if you see, the numbers are expected to be muted in the second quarter of financial year 2020. Now, compared to last quarter on the consolidated basis, the revenues are expected to be marginally higher at close to 20,900 crore rupees. The EBITDA is expected to be marginally down to close to 8,200 crore rupees. The margins are expected to come in at 39%, while the company is expected to report a net loss of close to 1,300 crore rupees. The key number, that is the ARPU for the India business, that is expected to be down by nearly 2% to close to 127 rupees. Now, the India wireless revenues are expected to decline marginally because the positives of the Tata merger will be offset by seasonality, temporary disruptions in circles like Jammu and Kashmir and in a flood-related circles. Now, the subscriber base, that is expected to be marginally higher at 28.3 crore, but this is largely because of the merger of Tata business in Bharti Airtel. However, the company's ARPU is expected to moderate, led by the addition of low ARPU Tata subscribers and seasonal weakness seen in the second quarter of financial year 2020. EBITDA margin, that is expected to remain largely flattish, mainly due to the continued benefit of cost control that Bharti Airtel has been doing. On the non-mobile segment, an improvement is expected, particularly in the enterprise and the DTH business. Now, the double-digit quarter-on-quarter growth in revenues and EBITDA are expected for the enterprise segment, while for the DTH segment, a healthy performance is expected. On the home broadband, a marginal uptick is expected, and on an overall basis, if you see the company's net finance cost, that is expected to see a sharp decline because of the fundraising activities and because of Bharti Airtel's African units divestment. Now, if you see on the Africa business, the numbers were operationally strong, which came out on Friday, so that could overall lead to a positive surprise on the consolidated business of the company. Now, the key things to watch out for would include the rate of 4G subscriber addition, asset monetization plans of the company, management commentary on tariff hike strategy to take on the competition, and the commentary on the adverse on the adverse AGR judgment that has come in will be important to watch out for from Bharti Airtel earnings today.
Samit, since you're already here with us, can you also tell us which are the stocks that we need to watch out for today's trade?
Well, firstly, the auto stocks will remain in focus because the strong sales have been recorded in Navratri, Dussehra and Dhanteras. Even Mahindra & Mahindra came out with this announcement where they said that they sold nearly 13,500 units, which are way ahead of their earlier deliveries. Secondly, Tata Motors, because the stock surged nearly 16% on Mahindra trading, post a strong second quarter results, and institutional participation will be watched today. Also, a lot of brokerages, as you mentioned, that was CLSA, Bank of America, Merrill Lynch and Axis Capital, have upgraded the counter. Interglobe Aviation, because DGCA has told the airline to change engines of 16 A320 Neos within the next 15 days. So this could lead to higher maintenance cost for the company. And the regulator has also warned the airline that the aircraft would have to be grounded if the engines are not changed in the next 15 days. Piramal Enterprises and Shriram Group companies will also remain in focus on the back of the Mint report, which said that Shriram Capital is planning to merge its Shriram Transport Finance and Shriram Capital within the company, and this move will aid Piramal Enterprises and TPG Capital to sell their stake easily. GVK, because they have signed an agreement with ADIA, PSP Investments and NIF for an investment of close to 7,600 crore rupees in their airport holding company, and this proceeds from this will be used to pay debt and purchase additional shares in Mumbai International Airport Limited. Tata Power, because the joint venture has acquired a gas-based power plant and diesel generating station at Karinagar from Tata Steel at a value of close to 920 crore rupees. And lastly, Ujjivan Financial Services, because they have clarified that there has been no red flags raised by the RBI in respect of their operation, as it was mentioned in one of the media articles.
Okay, Somit, thanks so much for that. But with that, it's a wrap on this edition of All You Need to Know. Stay tuned to BloombergQuint for more news and updates.
Attractive terms on takeover of home loans. Sanction in 5 days.